How to obtain a business loan from a bank? We're going to answer that question in this video. Okay, obtaining a loan from a bank is a process, and it's definitely something worth learning if you're going to stay in business and you want to open up a business. And here's one of the big things you got to know. Robert Kiyosaki, the author of Rich Dad, Poor Dad, was huge when he said, there's three types of professionals that you want to become friends with, build relationships with throughout your life as you're in business. Bankers, CPAs, and attorneys. So this will be a great opportunity for you to start possibly your first banking relationship, or if it's your second, to have another, or if it's your 10th, great, fabulous. But figuring out how to get a business loan, that is a process. So that's probably what you're looking to find out here. Well, the good news is I've got your answers. If you're just looking to get a traditional business loan and you've been in business for at least 3 years, generally it's simple. All you need to do is send them 3 years of your financials, your profit and loss statements, all the information that you turn into the IRS for your business tax returns, et cetera, et cetera. They want to see your numbers. They want to see what your business is doing. Is it making money? Is it losing money? Is it breaking even? How strong is your cash flow? That's important because the bank ultimately wants to know that they're going to get paid back. And if you're borrowing a large lump sum of money, they want to know that they're going to get paid back. That's the key here. So if you're going to apply, make sure you've got all your financials lined up. I like to keep mine electronically password protected in a safe spot, so that way I can just zip them over through email to any banker that wants to see it. Back in like the 70s, 80s, and 90s, you had to have these big stacks of papers and you would have to turn them into your bank, go to your officer, make copies of them and show them, and they would go through them. Now it's easy. You just can forward the emails that your CPA sends you. And most good CPAs will put your tax returns in a nice, organized fashion, and then you can store them, like say you have a Gmail account. Obviously protect it with a password, two-factor authentication, so it's not easy to get into your email, and then have each of those files password protected where they have a password. So it's like multiple layers of security, so the average hacker can't just get into your email and see all your financials. They would have to know a lot of information. So I recommend keeping them organized. So creating subfolders within your inbox, maybe you title it, 2020 taxes, and then next year 2021 taxes. And by the way, we're filming this in the year 2020, so many years from now this will look very outdated, but hopefully it's not, at least for years to come. So you'll have all your stuff lined up. You have everything organized exactly how you want, and then the banks, like I said, are going to want that documentation. Also, like we've talked about in previous videos, I hope that you've got good credit. A good credit score would be something above, today would be above 700. Excellent would be above 750. And I think perfect scores are 830. Somebody will correct me if I'm wrong, 840, 850, something like that. You don't have to have perfect credit. Almost nobody that's got great credit has perfect credit because they've got outstanding loans, and that, docks your credit to some degree. But as long as you're over 700, the bank, once they pull your credit, can see, hey, you're a man or woman of your word, you're paying all your loans back, and they're going to be most likely to lend you money if that's the case. You don't want to apply for a business loan if you've got a 400 or 500 credit score. Most likely the bank A won't give you the loan, or B, if they give it to you, they're going to charge you such high interest rates, it just defeats the purpose of getting the loan. You would have to, just absolutely be certain 100% that the money that you need for that loan is going to be put to great use, that you're going to be able to get the money back, and it's worth paying all that interest. So remember, banks use interest rates and the money they loan as like a risk versus reward system. So the interest rate, if you qualify for the lowest interest rate, that's because after the bank has looked through all of your financials and your credit score and your cash flow and things like that, how much positive cash you have coming out at the end of the month for your business, for yourself, once they see all that, then they're going to determine what your risk is. And they're going to categorize it like low risk, medium risk, high risk, whatever it is. They're going to categorize it in one of those columns. And then they're going to say, well, you qualify for 4.5%. You qualify for 8%, whatever it is. Now, there's other institutions that aren't actually your traditional bank where you drive up and you see like a big building and it says, Bank of America or whatever, your local, hometown bank or whatever. Those kind of banks are traditional banks, okay? That's what I've been talking about this whole video. There's other financial institutions, private investment groups that also aggressively loan money. But there's a catch, a huge catch when you borrow money from those companies. I don't want to say any names, but we get them in the mail all the time. And those businesses, when you call them up, they charge very high interest for their loans. I mean, most of them start around 10%. Some of them are 12, 14%. I've seen some as high as like 18%. That's ridiculous. Now, they're more lenient on, giving money and loaning money out because they know that most of the people that are getting money from them are the people that have already been denied by your traditional banks. So here's my recommendation. So you want to get a loan. And remember I said, I highly recommend not getting loans, trying to bootstrap your money, your resources, putting that together, building up a savings so that you can borrow it. But let's just say you're at the point where you feel comfortable and you say, look, I'm in a comfortable spot. I even have my savings. I've got good equity in my house. I've got some decent net worth. I just want to get a business loan. And if it doesn't pan out, I'll be fine. Under those circumstances, that seems like a pretty good shot there for you to take, the leap of faith and to get into that business. Or if you've been in business for a few years, to get a loan because you're established and you know that you're going to be doing this, right? But ideally, try your best not to have to get a loan. But if you choose to get it, make sure you shop around to all these different banks. And meeting these bankers should be a fun process because, again, back to Robert Kiyosaki, you want to build multiple banking relationships. You don't want to just have a relationship with one bank, because a lot of times your banker will go to it, he'll quit or get fired or whatever. He'll go to a different bank. And you might follow him around, but a lot of times your relationship is with the bank itself. So it'd be nice, my recommendation would be to have at least 3 solid revolving relationships. So if you lose one, get another one. And go introduce yourself. Dress the part, dress up, clean up nice, go sit down. Have discussions with them about, what your life goals are, what your business goals are, where you came from, your whole story, so they can understand you. Banks like it when you're transparent. That's what you want to be. They don't want you hiding stuff. Lay all your cards out on the table. Tell them if you've had any issues, explain your side of the story, because when they're going to run your credit, they're going to see what all your problems were in the past. So you may as well at least tell your side of the story, because the credit report won't say that. So back to building relationships with bankers. This is key. And obviously, like we said earlier, you're going to want to do the same thing with CPAs. You're going to want to do the same thing with attorneys. These are the keys to success as you grow in business, to building your empire in your business, is having those great relationships. And you will only grow the more relationships, the good relationships that you build, that you utilize, that you apply. That's how you grow in business. Now, there's another way to get a business loan, and that's through the SBA. I've done that before multiple times. Now the SBA, there's more paperwork. Sometimes the process is a little slower and their fees usually are generally higher. But there are some perks, as if, say you want to open up a medical practice, right? You're a doctor, you're a physician, and you say, hey, I want to go open up, I want to get a building. And so you say, gosh, all the banks I've gone to, they want me to put down 25 or 30%. A lot of banks are like that. They want to get a 25 to 75 debt to credit ratio. They call it loan to equity. Equity to loan value, loan to equity. There's so many different names you can call it. The bottom line is, how much money are you putting up versus how much money are you borrowing? Okay, so those terms, when you say loan to equity, that's what we're talking about. Equity meaning how much money you're putting in, basically your skin in the game, and then the loan is how much the bank's going to put into it. So if the bank knows you might be able to get it to be 80-20, where they'll loan you up to 80% of the value of the building that you're buying, and you only have to put in 20%. Well, let's say you're buying a building that's, $1 million. Holy crap, you got to put up $200,000 on an 80-20. What if the bank says, you know what, this is your first building, we don't know that you're going to survive in this business. This is a new, physician's practice. You've never done this before. So we want 70-30. Well, on $1 million building, you got to put up $300,000. So you can see where that gets difficult. The beauty about the SBA is if you've been established and you've got 3 years of business tax returns, 3 years of financials, and they look halfway decent, you can go to the SBA, and if they're willing to loan, and this changes nonstop, this is what it was like for me, you can put down as little as 10%. There might even be programs where you can put down maybe 5% or 3% or less. But when I got my loan, I only had to put down 10%. That's a big deal. But they got it on the back end. So on my closing fees and my interest rates, my interest rate was much higher than if I had qualified for a convention. Hey, I had to pay my dues. I had to buy my first commercial building, right? So I was willing to do it. So I had higher interest, but I had a lower payment, and I had, the terms that I had weren't super favorable because I had high closing costs. So these are all the things you have to consider as you're getting ready to borrow money. How to obtain a loan, the short version is have all your financials lined up, have your credit in good shape. They're going to ask you for, where your residence is, how long you've had your job, your business, whatever, all this. That's all standard. But the bottom line is you're going to need your financials. You're going to need decent credit if you want to qualify and you want to have a good loan with a low interest rate and good terms. So if you found this video helpful, please click the subscribe button below. I would love it. I would love to see your comments. If there's anything I missed out on, please comment below. I would do my best to answer them as soon as possible. And remember, keep pushing and be the hustler!